Hello and welcome to Crux Investor. We spoke with Clive Lyne, CFO of Serabi Gold. They're a AIM-listed gold producer with assets in Brazil. And he talks to us today about his Q3 quarterly numbers. And if you want to see more stories like this, you can find them at cruxinvestor.com/club, where you can also find detailed company reports. There are commentaries from experts from around the world on a variety of commodities and companies. There are training videos, and there are summaries of other interviews that we have carried out just to save you a little bit of time. And of course, there's a community of investors on there sharing their thoughts and ideas with each other. So go there now and sign up at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about with Clive, take a look in the description below. Clive, how are you doing, sir?
I'm very good, thank you. And yourself?
Not too bad, not too bad. Now, we are going to talk about your quarterly results today. Do you want to give us the highlights?
Well, I think we're doing pretty well. Mike Hodgson, when you interviewed him a couple of weeks ago, gave you the update on the production side of it. 7,200 ounces of production. That's fairly good. Cash position has improved again, so we're up above $10 million worth of cash. I think for most people, they'll be looking at sort of cash costs and all-in sustaining costs. Cash costs coming in now for the year to date just over 1,000, and all-in sustaining at just short of shy of $1,300 an ounce. But I think the most satisfying aspect for me is consistency of revenue, consistency of EBITDA, maintaining our operating profit in there at around 4.8, which was very similar to the Q2 figures that we put out earlier this year. So we're showing a degree of consistency, which, given all the circumstances in which we've been operating, is very satisfying.
Well, it's been a sobering year. It's been a very sobering year. You went off, you did well Q1, Q2, Q3. Not so much. And I guess the question people are going to want to understand is, where do you go from here?
Well, I think we have got, and I think Mike alluded to it as well, we've got an element of catching up to do. As he said, we did make a simplification of the operation over the last few months. In order to try and keep production going. It has reduced our optionality. We've seen that coming down in the grades, but ultimately the gold is still there in the ground. We just haven't had the flexibility in order to be able to get it out at the times that we necessarily want to. But we're putting in the programs and putting in the people to get that turned around. We are getting the full complements of staff back up onto site, so that's very encouraging. And as we've said as well, we've got sort of work going on, exploration crews, contractor crews, to help try and catch up that 6 months of underground works that we would normally have been doing, but just had to get suspended. So it'll take a little bit of time to make that catch up, but we will get there.
Okay, well, that's very important. So most people are back on site now, which is good news. Obviously, the restrictions have been lifted. How quickly can they ramp up to kind of full capacity and beyond? Because you're talking about the language of playing catch up here.
Well, as we said, we took a lot of all the contractor staff off site at the end of March. They've started to come back. Some of those contractors are doing surface drilling work. Some of them are involved in doing underground drilling work, which we need for exploration and for mine planning purposes. So that was sort of somewhat put to one side whilst we concentrated just on maintaining the operations and production. So we need to catch that back up. We'll get on with doing the work that we need to do, but we need to now try and filter in 6 months worth of work that hasn't been done as well. So there is a fair amount to do. It's not going to be done in an instant. It's going to, we'll start to see the benefits hopefully coming through in Q2, Q3 next year.
Well, it's the benefits I think people are going to be interested in. People catching it with work that should have been happening during Q2, Q3 is one thing, but in terms of ounces that are missing from your beginning of the year guidance, is it going to be possible to catch that up next year?
I don't think you're not going to catch it up in its entirety. No, we're still working on our production plans and production budgets for 2021. But I would certainly think that at the moment we're going to see, as we said, Q4 being fairly similar to what we've seen for Q2 and Q3. I suspect Q1 will be very much the same as well, and then hopefully we can start to see some benefits flowing through after that.
Meaning you'll get back to previous levels of 10,000 ounces per quarter or beyond?
Well, certainly get back up to the 10,000 ounces a quarter, and then after that, hopefully, if the work has been done, we should be able to build up and get beyond that and get to where we wanted to be, which was sort of the 11,000, 12,000 ounces a quarter once the ore sorter is really, really running and the benefits of that are feeding through.
Okay, and I think people need to remember, because I remember this from last year, Q4 can be a little bit more expensive because you've kind of got that, I can't remember the 13-month salary component.
There is, yes. Yes, it's, I suppose the UK doesn't see it, but we somewhat act as a savings bank for the employees, and they get an extra month's salary at the end of or paid their extra month's salary in November, December. So that always ends up meaning that the fourth quarter is an extra cost. Plus, as I've already said, we've got contractor drill crews back on site as well. 2 crews in underground drilling, 2 crews on surface drilling as well. So we really have stepped it up. So I don't think we're going to see quite the same levels of cash generation coming through in Q4 as we've seen in Q2 and Q3, but we'll keep moving that forward.
Right. So the underground, I understand. What's happening at surface on the exploration front?
On surface, well, we got the crews back onto the Sao Chico anomalies. So we're drilling out those and picking up those programs where we left off. As you know, we also picked up at the end of Q3, early Q4, a couple of extra tenement areas. We see those as good prospectivity, and we certainly would like to get one of those drill rigs moved over there, hopefully before the end of 2020, to start doing some exploration on there. It's sort of pretty much as Mike's described it. It's a drill-ready walk-up target, and we'd really like to put a little bit of meat on the bone on that.
Okay, and I noticed you sold more gold than you produced in Q3. How'd you do that?
Well, there's always inventory, and we produce gold in 2 forms, called bullion and concentrate. The bullion is fairly rapid turnaround. There's probably usually a 7 to 10 day lag in terms of its production to actually generating the cash flow from it. Concentrate tends to be building up a big enough volume of it to make a shipment across, and we sell it into smelters into the Far East. So from time, we always get a more of a lag. That can be a 6 to 8 week lag before we actually see the sales revenues coming through. So we did have a little bit of benefit coming through in Q3 and that's helped boost the cash flow a little bit. I suspect again we'll only see 1 sale going through in this quarter rather than the usual 2 sales going through, and we'll see one coming through in early January, which will pick the position back up again.
Okay, interesting. Okay, and final thing, Equinox. You paid down $5.5 million of the $12 million. You've had to dip into your funds a bit though, as well as your cash flow. So, do you think you're going to need to go back and have another conversation with them about these monthly payments, or you're going to be able to settle that debt off? No,
at this moment in time, no. Our intention is still to keep making those payments on a monthly basis. And our budgets are there and the cash flow should be there to be able to allow us to do that. Okay.
So in your opinion, what do you think people should make of these Q3 numbers? Because like I said at the start, it's a fairly sobering environment. Should we be looking hopeful towards the future?
Well, I think I'm reasonably hopeful. I remain confident. I think we're always there's always an element of caution. We've seen gold prices meandering around in the last few days in reaction to news on potential vaccines. We've seen movements as a result of American political events. We've benefited, and the figures are there and reflect the improvements that we've seen in the gold price. We've realized somewhere in the region of I think it's about 1880 gold price for the last in the last quarter. And that certainly helped the figures along quite very nicely. But so, if we do see a retrenchment in the gold price, if vaccines come in and there's a more risk off attitude from the investor community, then we have to urge a little bit of caution there, and we'll look at that as well with the Brazilian real. And we've seen the dollar weakening and other commodities strengthening, and that's always going to be that's another factor that we always have to take into account in looking at how we'll perform over the coming quarters.
Brilliant. Okay, Clive, well, look, thanks for the run through. Appreciate that. Look forward to speaking to you or Mike or both of you soon.
Absolutely. Thanks very much indeed for your time.